Welcome to Paydirt Unlocked, and to what we believe is probably the first live post-coronavirus business lunch in Perth.
My name's Dominic Piper. I'm editor of Paydirt and Gold Mining Journal and your host for this session. Let me introduce you to our panelists. It's a bit of a best of 2020, really. When we decided we'd do the best of 2020, we had a look at what the best discoveries were. And then Chalice Gold weren't available, so we brought Glenn Jardine from De Grey Mining, who've made a small discovery up in the Pilbara there called Hemi. Then we looked at the best mining stories, and then obviously Raleigh and Bill are very busy, so then we asked Mark Zeptner to come along to fill their space from Ramelius Resources. Thank you, Mark.
Thanks, Tom.
Then we were really thinking of a nickel project that we could get onto the program, and we had a few ideas. And then we saw that Dan Locker and Dave Southam and Victor Rajasuria were all desperate to have a drink all afternoon, so we asked Tony Rovira from Azure Minerals instead. And then finally we decided, well, the borders look like they're coming down. That's a great opportunity. We're going to get one of the largest gold companies in the country, CEO of that company, to come over and come and speak to us for the first time in 12 months. So we got in touch with Evolution Mining and said, Jay Klein, we're having this lunch. Would you like to participate? He said, yes. And we thought, fantastic. And then he said, just send me the WebEx details and I'll be in there. So we have Jake, I think. I can't quite see the screen. Jake, are you there?
I am here. Dominic, I'm not sure you're telling the truth over there. I think this was invited me because this was the only person you could invite without paying for lunch.
You've got me on that one, Jake. Okay, we're going to start. Really, the topic of, well, there isn't a full topic, but the area I wanted to pursue today was about meeting expectations. Expectations at the start of the year were quite high for mining companies and explorers. By March, they were quite low, and uncertainty reigned right throughout the world. But then by mid-year, with the gold price flying and other commodity prices picking up and the market seemingly falling back in love with exploration stories, expectations were raised again. Jake, can I start with you? Evolution is nearly a decade now in its current form. Has investor expectations changed over that period of time?
They have, Dominic, and they've changed. I put them down into kind of three distinct categories. The one is ESG. Over the last decade, it's changed dramatically from really a side discussion to front and center of every discussion. The number of inbound inquiries we're getting, and I think it's appropriate, but it's something that we're going to have to, as mining companies, deal with going forward as well. Cost of business is going to go up as a result of it, and I think that's a thematic, obviously exacerbated by the Juukan Cave disaster, and that's really put it in front of people's minds right across the country. The other one I'd say is the change from active fund managers to passive fund managers. A lot more of passive funds under management. Most of your shareholders are computers. Some of them are still people. But the active fund manager, particularly the active gold fund manager, is reducing. They're getting less funds under management. And then I think the other thematic that you'd have to contemplate as a miner is the changing geopolitical environment. We've seen it in the US elections. We're seeing it with the Australia-China relationship. Geopolitical risk is changing, potentially quite structurally, from what it was when we started Evolution a decade ago.
Thanks, Jake. Mark, can I ask you a similar question? I mean, Ramelius has gone almost just as dramatic change as Evolution has over the past decade. And you've been a miner that entire time. Has investor expectations changed?
Oh, definitely, Dom. They've gone, you've got to be all things to all people is what we find. Back in 2014, we were busy trying to survive. And, growing a company and capital growth, for a junior gold producer was really where it was at. And people started, even back then, talking about dividends. And our initial reaction was go and buy bank shares. And we said that all the way up into 2 years ago. Effectively, we now pay a dividend and try to deliver capital growth. So being all things to all people is one of the challenges in finding the right balance in that we face.
Jake mentioned the rise in passive funds and meeting the expectations of passive funds. Has that been a big adjustment in a smaller company like Ramelius?
Yeah, we've spent the last few years particularly growing our institutional shareholder base from pretty much a retail stock. We were back in 2014, 2015. We've got that institutional register up over 60%, but inside of that, there's more passives than actives by far. And the passives, when they decide to sell, it's pretty brutal. It's nice when they buy, but you don't really have a lot of control over that. And we're just getting a taste for the first time of the serious side of ESG with our entry recently into the ASX 200. Not that we weren't doing it, but we have to be more front and centre in telling people about what we're doing.
Jake, Mark's comments there about not that they're not doing ESG, but you need to report it better. Is that the same case at Evolution? Have you changed the way that you approach ESG, or is it still the same and you're just reporting it and presenting it in a different manner?
I think it's both for us. The standards which are being required by investors today is significantly higher, and the scrutiny is also higher. One of the things I'd say that investors aren't completely clear on is what exactly they want. You speak to different investors and different institutions, and a lot of them have different views as to what their priorities are. So getting some clarity from institutional investors as to what they really want mining companies to focus on and what the highest priorities are would be very good from our perspective. But I think this is an area that the standard is going to continue to rise, the expected standard, and companies are going to have to adapt to it. And I think the best way we can do it is preemptively.
Thanks, Jake. I might just turn to the explorers now. For the miners, meeting expectations is about ensuring the cash margins are still there, ensuring the cash flow is still there, and ensuring they're paying dividends. Glenn, for a company like De Grey, I'm sure there's not many companies for whom expectations of investors and shareholders have changed so dramatically 1 year to the next. What is that your challenge now, to meet those expectations that have been built into the company in 2021?
Oh, look, I think it's not so much about meeting expectations around 2021. We've had a really successful year in exploration this year. We really have only touched the surface of our province there at Malina. Hemi's, relatively speaking, compared to the tenement base, quite a small footprint. So if there are expectations on us around new discoveries and resource growth, I'm comfortable that we've got the tenement package that we can find more discoveries. So I'm comfortable with that. In terms of ESG that people have mentioned, in some ways we're a little bit lucky to come into this environment from being an exploration company, because we won't have to retrofit those sorts of policies and procedures. So we're onto that in a big way now, and we can develop those policies and procedures to meet current requirements without having to do retrofitting.
How important in that movement from being a small explorer into a very large explorer and potentially developer, how important is the G in that ESG component? Does that take a lot of time to get that governance right?
I haven't found that it's taken a lot more time than what we were doing. I mean, there are quite strict governance requirements for directors and companies in Australia anyway. Some of that's around formalising what we do. But we have noticed the same with Mark and our man at Evolution, Jake, that we have got institutional shareholders on the register now, and we have conversations with them quite regularly about not only our exploration at Malina, but also about what we're doing in regards to ESG. So we're well onto it.
Thanks, Klein. Tony, you've been involved in a number of discoveries in your career, most famously Cosmos. here in Western Australia. It looked like you may be on the start of a new one at the Andover project up in the Pilbara as well. Have the expectations in the immediate aftermath of a discovery, have they changed since your time with Jubilee at Cosmos? Is there more expectations this year in 2020, given the other successes we've seen?
I think the straight answer to that is no. Expectations have not changed from 20 odd years ago when we discovered the Cosmos with Jubilee Mines, because back then in the early days it was very much a discovery hole and then another hole and another hole, and so there's this expectation that every hole is going to be as good as or better than the one previous to that, and so there is a very strong expectation that you're going to continue to get better and better and better. And that was the case 20 years ago, and it's the case exactly the same today. Until recently in the last few weeks, we have not had an institutional shareholder base. It's been mostly the mums and dads and the retail stocks. And their expectation is immediate turnaround. They want things today, tomorrow, the next day, not 6 months, 12 months' time. So, expectations have not changed. It's still short-term thinking. However, having made this new discovery at Andover and having recently carried out a very significant capital raising, which has brought a lot of institutions onto our register, we're obviously going to have to listen to what they want as well and act accordingly.
Thanks, Tony. Jake, I'll come back to you. I've just been reading a story that's about to come out in the next edition of Goldman and Journal, an interview between yourself and my colleague Michael Washburn. In it, you mention the size of the company, the size of company that you wish Evolution to be. Can you explain your rationale behind the size of the company you want, how many operations you'd like in the company, and how you match that with continuing to grow in the eyes of investors?
Sure. We started the company saying that we wanted to build a mid-tier because it gives the best returns to shareholders. And it allows you to have a culture within the organization where people really feel that they make a difference. I've reflected on this a lot over the past decade or 2 decades. And I'm not sure that gold is really a scalable business. What is the synergy between an asset and an operation on one continent to another? And to me, there's the important piece of a gold company, or the important components are 6 to 8 assets. Mid-tiers are big enough to generate enough cash flow that you can fund your own growth. You can pay dividends to shareholders and reward them with capital growth as well. And where you're small enough where discovery can also make a real difference. You never have the right 6 to 8 assets. To us, you've got to keep improving the quality of your asset base. We've sold 3 assets in the last 5 years. We've bought 4 assets. So to us, it's about having a portfolio of assets which allows you to give a less volatile outcome and more predictable outcome to shareholders, and allows you to really create value and have a culture of an organization that people want to be a part of.
Thanks, Jake. Mark, does that apply at Ramelius as well? You're on a growth trajectory. Is that a similar feeling at the company?
Yeah, I don't think there's an optimal size. What we felt was that there was a minimum size. For a long time, the company was a 80 to 120,000 ounce producer, which, depending on any given year, you sort of bounce between the two. And we realized that was a little bit of a road to nowhere. And we did look at a larger peer group, of which Evolution is one. And we identified that 300,000 ounces was a minimum, and that notionally would be 3 assets to give you that production diversity that you're looking for. Beyond that, we know we're not quite there yet. Beyond that, we'll reassess. But, there's no optimal size above that, but I think there might be a minimum size and a minimum diversity the market's looking for. Everyone wants a world-class single asset, but single asset producers in recent years have tended to be swallowed up if they actually have been successful. And we've seen some stories that haven't gone so well. So having that diversity, I think, is what the market looks for at a minimum production level.
Do the changes within the peer group then affect your strategy? So there's the Northern Star Saracen merger and almost the creation of a hole in that mid-tier. Does that affect how your outlook for future?
Yeah, hopefully it drags us along a bit. It creates that vacuum and it pulls us along. But I think Jake's right. It doesn't necessarily mean that consolidation is good in all cases. In the case of the super pit, having 50% ownership of the super pit, I think makes absolute sense. Similar in the lithium space, having the same ore body owned by two different partners and the consolidation happening there, I think that makes sense. Not necessarily in the gold space, but I think in the gold WA space, there's still room for consolidation, given that, you know, you typically 1 or 2 hour flight from Perth, you can manage it quite easily. Cross-border and overseas, Jake's point's right also that, you know, do you get synergies from operating offshore when we know it's a lot harder, you need a separate team, etc. But definitely within state and within country, I think the synergies can be realised, and I think there's a bit more to play out in that space.
Jake, I'll ask you again. I did want to, and Mark's just raised the point of your comment about different continents and synergies. You have, of course, bought an asset on a different continent in the last year or so. I'm not even sure that you've been to see it yet, have you? You might not have had the opportunity to get over there yet. Can you talk us through the rationale of buying a project on a different continent?
Sure. We were fortunate in that we actually signed the deal last November. So we'd done a lot of due diligence ahead of that, and we were visiting it up until when the borders closed in February. So we were fortunate that we know the asset and the people quite well. But the rationale was pretty simple. Canada's a great place to mine. We think we can manage 2 jurisdictions and keep and retain the core culture of evolution. It's a place which we kicked a number of tires. We looked at a number of opportunities and came across Red Lake when Newmont were exiting it, and thought that this was the asset which had 2 critical things which any mine has to have for me to be successful. The one is it has a mineral inventory, which is now 11 million ounces, which is the largest ore body we have in our company. And it has great people and a real turnaround opportunity. So people and gold, and you can fix the rest.
Indeed. Glenn, can I ask you, is there an optimum size for De Grey to get to? Is there a manageable size the company can be and manage an asset like Melina by itself? Or does it come a natural point where you need to bring in a partner?
In terms of scale, we've already said that we want to demonstrate a tier 1 scale at Hemi, which we defined as 300,000 ounces a year for a minimum of 10 years. So that's the minimum scale we wanted to get to. And we felt that was achievable, but also put us into a fairly rare group of people. That was the minimum scale we wanted to get to. So we would obviously like to see ourselves as a bigger producer than that when we kick off. In terms of bringing in a partner, we've had a look at a lot of case studies. We've done our own internal modelling. And in terms of the current shareholder base, the maximum value for that group of shareholders is for us to retain control of the asset and go into production. And that's our strategy.
Is the geology playing a part in that then? I'd imagine if you found a big deep porphyry deposit, the impetus to find a partner becomes a lot stronger because it's expensive drilling. Things are relatively shallow up there at Hemi, aren't they?
Gold porphyry or a copper one?
Copper.
Oh, we'd spin it out.
Yeah. But the geometry and the geology that you're facing up there, does that play a hand in the fact that you can go it alone because the exploration isn't expensive?
I think the style of the intrusion deposit helps that because you know we've got these really quite large intrusions like the Brolga zone at Hemi, which have got a really high gold endowment per vertical metre. They're just things that are a couple of 100 metres wide, long and deep, and that does make for a relatively low strip ratio open pit. So relatively speaking, that would be simpler than a more complex copper porphyry that starts a kilometre down. Yeah.
Tony, I would just ask Jake about buying an asset offshore. You've almost done the reverse. You were committed to Mexico for more than a decade with various projects across the country there. Obviously, the start of COVID must have led to a reassessment of priorities and the way you could operate. we always hear about the need for explorers to be fleet-footed and quick-thinking. Is that the case with Azure? Is that what drove you to find an asset here?
Well, actually, yeah, it's exactly that. Just on a serious note, obviously, COVID-19 is an incredibly serious issue all the way around the world, and it's brought enormous inconvenience, disruption, trauma, illness, even deaths around the world, and it's a very serious issue. We're not saying that we predicted it would be so serious, but we did see back in March that there could be issues, could be problems for us to operate efficiently and safely in Mexico. So as a company, we just thought to ourselves, what is it that we need to do to continue to be relevant and to continue to operate? And well, the best place to be is Australia, and probably the best place is Western Australia. And we made that conscious decision. And basically it was under the auspices of if there's a significant amount of adversity, there will come significant opportunities. And we saw there an opportunity to come back here and to engage with Mark Creasy, and in time we were able to close up a deal with him to acquire some projects. And we saw the opportunity, we took the opportunity, and the result has been fantastic for our company with the discovery of a really good looking nickel deposit. And the Andover nickel target that we're drilling right at the moment, I believe, has the potential to be one of the best nickel discoveries in Western Australia in the last 2 decades. And that all came about because we were quick off the mark to return from Mexico back to Western Australia.
He actually just followed me up to the Pilbara. That's all that happened.
For those who don't know, we should point out that Glenn started the year with Azure Minerals. Glenn, I just wanted to ask, actually, you've been involved in two of the companies you've worked for this year have had two most exciting discoveries.
Yeah.
Admittedly, one before you arrived and one after you left. What is the secret of your success?
Timing, clearly.
Jake, can I ask you again? As Tony mentioned, the pandemic led to a reassessment of everybody's priorities and strategies. Did evolution do the same? And how is the effect we hear in Western Australia about, the ministers just said, how the mines have carried on and we've had no cases. How has it been on your assets in the East Coast? Has COVID had an effect on operations there?
Australia's done an incredibly good job at managing COVID relative to almost every other country in the world. It's been an inconvenience for us rather than a disruption. So we haven't had a case of COVID in any of our operations, Canada or Australia. We haven't been able to visit as often, but the mine sites seem to have benefited from that because they're actually operating better than when I normally visit. So maybe that's a positive. And it's probably made us reassess as to how often we actually need to be on site and what value we're actually adding when we're there. So it has been an inconvenience rather than anything disruptive. And I think the point made earlier that it has been a tragic and very disruptive event for almost everywhere in the world. It's a credit to the way the Australian government and Australian people have managed it.
Have you been able to assess an economic impact on a per ounce basis? Have you looked at what that impact may have been?
I don't think we could blame any of the issues that we've had, and we haven't had many issues. We're still producing lots of cash and low-cost gold, but I don't think we could point to COVID as doing anything from a cost perspective for us.
Mark, have you done any assessment in that regard?
We have, but I can tell you it's minimal. It's mainly administrative. And we get sideline benefits when the guys on site tell me, well, this year we didn't get the flu go through site and wipe out a number of people in terms of lost days. So the whole regime, sanitisation, stowing of meal shifts, all of that stuff has actually played into the fact that we haven't had a bad winter in terms of the normal impacts you get from the flu. So there's been some nice sideline benefits, and the cost of it would be lucky to be $1 million is probably my guess, but it's not material. In fact, you get more of a benefit than we have in terms of an impact.
Jake, can I come back to you again? We've just heard from Glenn about the Hemi discovery up in the Pilbara, and we've seen a number of other exciting gold discoveries this year. We often lament in the Australian gold industry a lack of spending from the larger companies in the greenfields exploration space. Has this piqued your interest in the juniors around the place, the rate of discovery we've seen this year?
Yeah, it has, Dominic. I mean, it's a credit to the people on stage and the various successes that have been had. Australia is doing well. Its gold industry and now its nickel industry is in really good shape, and it presents opportunity and excitement for investors and the industry as we get these discoveries. The challenge, I believe, is that given that it's relatively easy to raise money. The general path which companies which have exploration success and have a development opportunity go down is a tendency to go towards independence, and that's not independence the company, but independence by raising money and generally going down their own path, and their openness to inbound engagement is lower. So we've picked up ground. We're in the Murchison area. We've picked up quite a bit of greenfield exploration ground. Musgrave is an area where we have a joint venture in. But I think most of the opportunity was probably generated a couple of years ago when it was harder to raise money.
Mark, you've picked up a couple of bolt-on projects from smaller explorers. Is that a strategy that you'll continue to pursue?
Yeah, pretty much. We draw circles 200 to 300 kilometres around our production centres at Mount Magnet and Edna May, and anything inside there is fair game. We've shown that we can track beyond 300 kilometres, fair enough, on sealed roads, but quite successfully, where at one point in time people didn't believe that could be done. And as long as you've got grade, that obviously helps. You can make it work. So we look at those opportunities within those circles, and ideally you get in early. It's the challenge is always after one hole, two holes, or are you too late? And we've probably suffered from that in the past. But our most recent one at Penny, we waited a bit longer. We paid a bit more for it, but it's a Ramelius project, a bread and butter Ramelius project, and we felt we sort of had to own it, and we go hard when we see something we like.
With valuations for explorers on a steady incline this year, has it changed your attitude to those sort of bolt-ons? Have you thrown more into your own exploration?
Oh, it's changed my attitude. I can't buy a Vivian project for $10 million anymore. I've got to pay $200 for. Fair enough. It's it's twice the grade and half the distance. So that's what 10 years of gold price appreciation has done. But there's fair to say that exploration projects are getting fully valued. It makes it harder for us to find value. The margins are squeezed. We'll pay on a Vivian project $10 million. We'll return $100 million. It's probably a bit harder to do that nowadays, but it doesn't mean that there's not still opportunities out there.
Tony, as we said, we've seen a remarkable year for exploration discovery from juniors, from Hemi to Julimar, Musgrave up at Kew has made a great discovery. Border, there's been, and then what the majors have done at Havieron and Winu in the last couple of years. Why are we suddenly seeing this rush of exploration success? Can you put your finger on why it's occurring now?
Well, interestingly, I think two of the great successes, which in recent times, Hemi and Julimar, actually happened before the COVID came along. So we can't say it's because of COVID has forced us to focus back into here. But I think it's and for completely opposite reasons. De Grey found theirs after 20 years of exploration in that same area. And on the other hand, Chalice found theirs after a few months of picking up the ground. So once again, there's a difference there. No, I think it's just in some ways it's the understanding of the geology and the means of carrying out the exploration to generate success has improved. The geologists are getting smarter. The things don't stick out of the ground anymore. So a lot more thinking power is having to go into making discoveries. And those discoveries are being made because more people are thinking more clearly about what they need or what they want to find. In addition to that, obviously, in the last few months, probably 6 or 8 months, there's been the capital markets have been very favourable for raising a lot more cash, and so therefore you can put more drill holes in the ground, and there are more discoveries are being made in recent times. But the bottom line is Western Australia even as a major mining and exploration centre around the world, is still in some ways vastly undertouched, underexplored, and there's a lot more yet to be found probably, and it just requires perseverance, good thinking, and some capital.
Glenn, would you share that sentiment?
Oh, absolutely. And one of the things that's clear to me is that a lot of dogma surrounds exploration. You'll never find a decent gold discovery in the Pilbara, right? That was dogma. And it does surprise me because exploration geologists are usually quite open-minded, but you do get dogma, and that dogma probably increases as a company increases in scale in terms of looking at new opportunities. So I think it's been really great to see those set ideas turned on their heads, and what Tony's saying about being deposits being undercover. Hemi discovery is undercover, and that wouldn't have been found without some drill holes. And so an exploration company has to have enough money and enough capital to put holes in the ground, which are much more expensive and usually than geophysics. So the companies have been able to raise capital is really important because the truth detector goes out there, and that potentially will find you a gold or a nickel deposit.
Thanks. I think I've done enough work now. I think it's your turn to do some of the work. Have we got any questions out in the audience? Liam's put his hand up.
Thanks, Dom. I've got a question on ESG, and before everyone lets out a big sigh going, really, ESG, it has a big bearing on your capacity to get institutional investors on board and raise money. And my question is, we've seen annual reports that have got 100 pages dedicated to ESG, which, has smiling faces in the community. But for companies looking to raise money, they rely on the proxy advisors, and the proxy advisors want you to meet a lot of ESG requirements, and they outsource this to someone in India. So they've got to go through your annual report. I wouldn't say tick boxes, but they're not necessarily going to go through 100 pages. And I guess with this growing importance on ESG, I'm interested whether any on the panel have a reporting standard that they report to. SASB's one, the Sustainable Accounting Board, they're one that have a standard form of reporting you can stick in the back of your annual report and gives people a checklist. But that's not the number one. But I'd be very interested in the panel and from Jake in particular on whether you're reporting to a particular standard or whether it's sort of an ad hoc approach, because it's a big issue.
Jake, would you like to take that one first? That was from Liam Twigger from PCF Capital, by the way.
I know Liam Twigger well. We started at Macquarie about, 100 years ago, was it, Liam? Hello, Liam. Thanks for the question. But there are standards, and I think the further we can move towards agreeing on what those standards are and should be and what everyone should report to, the better off we are. Because I agree with you. A lot of it is, and I keep saying to our team, we don't want to do things because it looks good on the wall. We want to do things because it really is good. So our focus is on power consumption and water usage. Those are the two priorities which we're giving and we're reporting against. We are making decisions, and we've done a benchmarking study as to which standards we want to actually report to. And our next sustainability report will hopefully be shorter and also report to much more specific things.
Thanks, Jake. Mark, did you want to have a...
Our sustainability report is now 20 pages this year. It was 4 pages, so that shows you how things can grow. I'd like to endeavour to keep the sustainability report within the annual report. I see that some people have got sustainability reports that are now larger than the annual report, and I think that's a dog with the tail sort of wagging the front end of the tail. And I'd like to think that people actually read that information if you're going to put it in there. Sustainalytics is one of the ones that do report. We were a little bit surprised to see in our recent proxy advisors saying, well, you got a very low mark here, and the guys at Sustainalytics not sure where they were, somewhere in the world, were ticking boxes from our report 1 or 2 years prior. So they weren't even using up-to-date information, and we thought we'd actually put out a decent report. So it's great to put out information that, had a very heavy community focus, environment, social, all the right boxes, but people weren't even using it and giving us quite a low rating as a result. As soon as we can sort out which standard to report against, because I think this is one area where there are 10 standards, SASB, sustainable, there's a whole raft of them, the better.
Glenn, has the company adapted to sustainability this year? I'd imagine the question's much different now.
Oh no, we because we've the scale we are and the expectation on us because of that scale. ASX 300, perhaps ASX 200, as Mark was mentioning earlier. There's a lot more focus on us to be able to deliver in that area, and we have had numerous discussions with our institutional shareholders around ESG, what we're doing, how we're going about it. So we are taking it seriously. We, in the last, I think, 6 months, have employed a manager for risk, health, safety and environment at a senior management level, and we 2 weeks ago employed a manager for community relations. So we're getting all those systems well and truly in place to deal with that. As a budding developer and producer, we'll be at the pointy end of that when it comes to people interested in loaning money, particularly in terms of their policies around lending and climate change and ESG. So we're lining ourselves up to be able to meet those criteria.
Tony, do your ESG commitments, even as a junior, change when you shift focus from Mexico to Western Australia, or can you keep the same?
No, in fact, quite the opposite. Because when we initially moved from Australia into Mexico, we endeavoured to bring Australian standards to all the operations that we undertook in Mexico, and those standards were a lot higher than both local companies and even North American companies were operating under in Mexico. So we tried to be leaders there, and I think the government over there recognised that, and I think we actually won some solid recognition for what we were doing in Mexico and bringing in very high standards of the Australian style. So coming back from Mexico back to here, things had certainly changed, and it's been a steep learning curve for us to ensure that we're meeting the current high standards in Australia, but we're ramping that up very quickly. But we've always had very strong environmental and social and community engagement and doing the right thing, and that's not going to change going forward. And as for the governance side of things, well, we have to meet all of those regulatory requirements, and we always have and we always will.
Thanks, Tony.
Dominic, can I just add something to that? Because I think it's an important area, and if I reflect on it, and Liam's point about the size of these reports, the remuneration component of these annual reports is now, in our case, 30 pages. We get, I think, 4 proxy advisors writing about 30 pages each on our 30 pages. So there's 150 pages of information on our remuneration. I think a big risk in the ESG space is that institutions basically contract this work out to proxy advisor firms who then start to opine, and you're going to get a snowballing effect on your 50 pages of ESG becomes 300 pages, and it starts to become almost an outsourced thing. So I think it's really important that the dialogue between the company and the institution is bilateral and not multilateral with different organizations opining and providing opinions on it, because otherwise it's going to get out of control.
Thanks, Jake. We've got a lot of people nodding in the room here. I'll come to you first, Mark, and then I'll go to Jake, and then I'll come and ask the guys as well. We'll work our way around. Looking at gold equities, share prices and the performance in the last 24 months and the cash margins that you're producing and the gold price itself reminds me of Warren Buffett's line about only when the tide goes out do you tell who's been swimming naked. When you look at the international gold scene, I'm not asking you to pick on any of your peers locally, but when you look at the international gold scene, do you see peers that are perhaps swimming naked? Do you think if the gold price, the tide does go back out, will there be blood on the market floor?
I probably couldn't tell you on the international space, to be honest, Dom. We look and obviously compare ourselves very closely to our ASX listed peers, and that's what we get measured against ultimately. So that's who we compare ourselves against, and we I suppose set our own benchmarks in terms of cost control. We've got a pretty proud record of being in a pretty tight range over the last 5 or 6 years. We're not at $1,000 an ounce, but I don't think you need to be at that level anymore. You know, $1,200 to $1,300 an ounce is still good margins. If you can control that part, you can control even at current gold prices, which is bouncing around quite significantly at the moment. There's still excellent margins in the industry.
Thanks, Mark. Jake, the same question really. Are you looking fearful for a gold industry where the gold price retreats?
Well, let me first start out by assuring you that Evolution's wearing a full-length wetsuit. That comes out, you will see no nakedness at all. We're very focused on margin. I was a little horrified to read some research from a broker the other day that said that the all-in cost, if you take everything in the Aussie sector, gold sector last quarter, was 2,300 Australian dollars an ounce. That's including sustainable capital, all-in capital. That does seem a bit skinny to me. So if I were that group, I'd certainly be starting to reach out for a towel and started trying to wrap it around before the tide does go out, because $2,300 an ounce would be a horrible number if that's really the case.
Jake, you must be a bit concerned about the tide going out if you're in a full wetsuit.
Yeah, well, I just want to we want to insulate ourselves and make sure that the tide always goes out in the gold sector. That's what we're preparing for. That we're in a cyclical space, and being a low-cost, high-margin producer to me is where you've got to be. But I just hope we don't end up with a situation where investors end up disappointed if the gold price does go down a couple of $100.
We've obviously seen it before, Jake. Do you think the gold sector, gold equities have rebuilt their reputation with generalist investors, or is it still quite a precarious situation?
I think we have done well. I think the Aussie gold sector has done remarkably well. And I think investors who 5 years ago were saying, we want discipline, we want return on capital, they've got to be cautious themselves, because they're now saying we want growth and we want to see you doing things and we want to see more capitalists. So that creates some froth in the market, which I think you're potentially seeing now. And I would like to see us all sort of be running our businesses that a long-term gold price of 2,000 Australian dollars an ounce or even lower would not give us any problem. If it's higher than that, we're all happy. We're making money. And the next time I'm in Perth, you'll buy me lunch.
Well, I'll let you hold me to that one. I'm sure we can find somewhere. Glenn, are you worried that if the heat comes out of the exploration sector, if we've seen enthusiasm for exploration at the moment, that you'll be caught with your budgie smugglers around your ankles?
I think we've got enough scale there to deal with that in terms of the cyclical nature of exploration. But for us to sit here and to say it's always going to be plenty of capital on hand for explorers, we all know that's not true. But I think the thing with the discovery there is that it's of a sufficient scale to deal with that issue. In terms of the gold price, we're confident in the long term of the gold price, and have been. I have been for some time. I mean, the response to the GFC was to print more money. The response to the coronavirus was to print more money. So from a long-term perspective, I don't particularly see a reason for the gold price to go out a long way.
Tony, you're obviously focused on a different commodity with different supply-demand fundamentals. But you're still in that exploration space of enthusiasm. The big capital raising you put away earlier on this year, was that to ensure that you can continue going insulate yourself against any retreat from the sentiment towards explorers?
No, the reason we raised the money was to be able to go and spend it. That's why you do it. It's not to provide us with insulation that we can survive for another decade. No. We'll be out there spending money to make sure that we meet the expectations that the investors have for what we raise the money for. We'll continue to spend, to explore, to find, and hopefully develop. And I hope that we are so successful in the months to come that we can follow Glenn and go from a 30 million raise to a 100 million raise. And so that we can really push forward and develop our project towards mining.
Great. Thanks, Tony. We've got time for one more question, I believe. Really? Journos in the room, ex-journos in the room, there's nothing. Well, looks like we've solved the world's problems, gents, in this 50-minute spell. That's almost it then for this panel. I'll just, you might have noticed we had a business card drawer at the front there. The prize was a night's accommodation for two here at the Pan Pacific. And the winner is Victor Rajasuria from Panoramic Resources. Well done, Victor. I should point out that former Gold Road Managing Director and current Matador Mining Executive Chairman Ian Murray is also staying here at the hotel, although not because he won a prize. He's currently in day 11 of his confinement. And I think we're live streaming today, so hopefully he's got the link. I sent him the link earlier. I know he was desperate to catch up with you all, but we weren't going to let him come down even in his little bubble. So hello, Ian, upstairs, and hopefully you got some of the nice lunch. That's it for Paydirt Unlocked today and in 2020. Thank you so much for joining us. Please stay and enjoy the drinks and the food that's still to come. I just ask you to join me in thanking, first of all, Jake over in Sydney. Thank you, Jake.
Thanks, Dominic, and to you, Phil, Michael, and Mark. Thanks at Paydirt for giving us a platform and a voice that promotes the industry. It's appreciated. Thank you.
Thank you, Jake. And thank you to Tony, to Mark, and to Glenn. And I'd just like to announce each year in our Gold Mining Journal January edition, we gather a panel of judges to decide on the best gold miner and best gold explorer of the year. That magazine has just gone to the printers this morning, but I'm pleased to announce that the winner of the Explorer of the Year, and not really any surprises in the gold space at all, is De Grey Mining. So Glenn, congratulations. I've got nothing to present to you because we haven't got a magazine yet, but you'll be able to read it. It'll be out next week, and you'll be able to read all about it. And I should really point out that the Miner of the Year, which was a little bit of an upset. Mark, you were very close, I must point out, but you didn't quite make it. But you've had enough awards this year anyway, we decided. But the winner is Perseus Mining for the remarkable job they've done in Côte d'Ivoire and Ghana in the last 12 months. So congratulations to Jeff and the team. And once again, you'll be able to read all about the panelist discussion and interviews with both Glenn and with Jeff in the January edition of Gold Mining Journal. Thank you for...
Yeah, the sooner you get a different guy on the front of that magazine, the better.
Yeah, well, we've had to pulp a lot of them last edition. So.
You've got to do a rerun.
What was a bit concerning was when we've put the cover on there, we've got the Miner of the Year, and it's Jeff Quartermain, who's an accountant. And then for the Explorer of the Year, we've got Glenn, who's a mining engineer. So I'm not sure where everything's going there.
It's only appropriate.
Yeah, exactly right, yeah. Dual roles. So thank you very much. Please stay and enjoy yourselves. And those who are going to the AMEC convention dinner tonight as well, you can carry on. And I'm sure Warren and the guys won't mind you stumbling in there later on in the state you are. Thank you.